If they buy mortgage-related securities or mortgages themselves at current market prices, they're going to make money over time because the United States government has staying power and it has a low cost of borrowing. And if I could take 1% of that 700 billion pot and take the gain or loss from it and be their partner, and they would buy the stuff at market, I'd make a lot of money. Yeah. No, I mean, you have hedge funds and people like that buying these assets to yield 15 or 20%. I mean, that's the buyer for these people that are trying to unload them. The U.S. Treasury has got borrowing costs like nobody else has. They can borrow basically unlimited amounts. They can stay there for years and years. These assets will be worth more money over time. So when Merrill Lynch sells a bunch of mortgage-related assets at 22 cents on the dollar, like they did a month or so ago, the buyer of those is going to make money, and he's going to make a lot more money if it happens to be an institution like the U.S. government, which has very, very cheap borrowing costs.
Bubble. We will have other bubbles.
We'll have other bubbles. I'll guarantee you.
Are we going to go back to the same kind of leverage?
Not for a while. We learn lessons, and they last for a while. And the deeper the wounds, to some extent, the longer they last. I was a beneficiary of that. I mean, I got out of school in 1951, and all my competitors were still worried about the Great Depression, and my memory wasn't good enough, so I had forgotten. This will have this will have an impact on thinking for quite a while in certain respects. But fear, greed, folly,
not going to change.
We haven't got rid of those. We get smarter in all kinds of ways. We don't get smarter emotionally.
Why is that?
It's just the way the human animal's put together.
If you own stocks like you'd own a farm or an apartment house, you don't get a quote on those every day or every week or anything. You look at the business, and the value of American business depends on how much it delivers in cash to its owners over between now and Judgment Day, and I don't think it changes in 10% in a 2-month period if you're looking at it as a business. Now you've got anything can happen in markets. I mean, anything can happen in markets, and that's why I say don't ever borrow money against securities. That markets don't have to open tomorrow. I mean, you can have extraordinary events. So I think to some extent you can get some of the instruments that people don't understand very well that have a lot of firepower in them.
Like
and
the volatility index and things that are tied to that.
The idea of people taking a position, and they're gambling, they're not investing. Nobody's investing when they buy, some supercharged index on, on how the VIX does or something like that. They don't need it in their life. It's an unnecessary instrument. Now, they will create instruments that the public will buy, and you can just count on that. Wall Street's been doing that since they met under the Buttonwood tree in 1792 or whatever it was on the exchange. So